Today we are going to discuss one more question related to depreciation. And today is the last class for this lesson, depreciation, and then we will start the new topic tomorrow onwards. Okay, so see, here we have a question. See in this question, Mustafa's financial year ends on 31st March. This is the last date of the financial year. And who is the businessman? Mustafa. Now see what happened. On 1st April 2012, he purchased an equipment on credit. He purchased an equipment on credit basis from AB Limited for $10,000. He brought an equipment and from AB Limited for $10,000. Now see, he decided to provide for a full year depreciation. Now see what is here. He decided to provide for a full year's depreciation on equipment in the year of purchase. It means the year in which he brought that equipment, in that year he will charge a whole year's depreciation. Okay, but no depreciation in the year of disposal, and the year in which he will sell out that equipment, in that year he will not charge any depreciation. Okay, so this is what he decided, that the year in which he brought the equipment, in that year he will charge a whole year's depreciation, but he will not charge depreciation in the year of sale. Now see, after that, he decided to depreciate the equipment at the rate of 20% per annum using the straight line method. Now which method he is going to use? The straight line method. This is the method he is going to use, straight line method. Okay. And what is the rate of depreciation? 20%. Now see, after that, on 1st October 2014, half of the equipment, this time he is selling only half of the equipment, not the entire equipment. On 1st October 2014, half of the equipment was sold on credit to X Limited for $2,500. Open necessary ledger accounts in the books of Mustafa. I have to change the name. In the books of Mustafa. Open necessary ledger accounts in the books of Mustafa. Agree? So this is the question. You understood the question? Now see, first we will prepare this schedule of depreciation, and using this method, straight line method. Straight line method. Okay? Now see, first I will write the years. In which year he brought the furniture? On 2012-13. So 2012-13 is the first year, then second year is which one? 2013-14, and third year 2014-15. And in this year, in the third year, he sold the furniture on 1st October 2014. Okay? So what is the opening value of the furniture, of that equipment? $10,000. And depreciation now I need to compute. On 10,000 at the rate of 20%. So the depreciation will be 2,000. And as the method is what? Straight line method, isn't it? So every year I will charge depreciation 2,000, isn't it? Because the method is straight line. Only we need to compute depreciation only one time. Now what will be the closing value? 10,000 minus 2,000, 8,000, and this closing value will be the opening value for the next year. And now next year the closing value will be 6,000. Okay, and this 6,000 will be the opening value. Got it? So this is the schedule of depreciation. Okay. And in this year we sold the furniture in the third year, isn't it? So in this year we will not charge any depreciation as per the condition. So I am going to remove this, because in the third year, in the year 2014 we sold the furniture. So in this year we will not charge depreciation. Okay. So this is the schedule of depreciation. Got it? Yeah. Now see, I am going to prepare the necessary. I am going to open necessary ledger account. Okay. So first account we need to open is equipment, then provision for depreciation, and then equipment disposal account. Okay. So see, I brought the equipment when? On 1st April 2012, isn't it? So see here, on 1st April 2012, Mustafa brought an equipment on credit basis from AB Limited. Agree? Yes. So he brought the equipment, so increase in asset, isn't it? So debit the asset. Equipment will be debited, and how much amount? $10,000. And he brought equipment on credit basis, isn't it? From AB Limited. So now he need to pay money to AB Limited, isn't it? AB Limited is a liability now, isn't it? So increase in liability, credit, AB Limited. This is the vendor, so 10,000. So understood the entry? Yeah. So increase in asset, debit, increase in liability, credit. Why liability? Because he brought the equipment on credit basis. That's why it is a liability. So increase in asset, debit, increase in liability, credit. Okay. And he brought this furniture on which date? April 1st, 2012. April 1st. On 2012. Now see, in this entry what happened? Equipment account debited. So in the equipment account, posting will take place on the debit side. On the debit side I will write amount 10,000 and I will write the name of the opposite account, AB Limited. And I will put the date. Date is which one? 2014 April 1st. First I will write the date, then I will put the amount 10,000 on the debit side because equipment account was debited in the entry. Yeah, sorry, 2012. Same mistake I am going to commit again. Yeah. So see in the equipment account, let me explain you again. See in the entry what happened? Equipment account debited. So on the debit side of equipment account, first I will put the date 2012 April 1st. April 1st, and I will write this one. And I will write here amount. How much amount? 10,000. And then I will write here the name of the opposite account, AB Limited. So understood the posting? Yeah. Now when the year will over? When the year will over? 2013 March 31st. So I need to charge depreciation, isn't it? So see the year will over on 2013 March 31st. So on March 31st, now I will record the depreciation, isn't it? So how much depreciation in the first year? $2,000. So see, this depreciation is what? Loss for me. Yes or not? This depreciation is what? Loss for me. So I will debit which account? Profit and loss account. Profit and loss account will be debited with how much amount? The amount of depreciation, isn't it? And I will credit with the account. Tell me. Provision for depreciation with how much amount? With 2,000. Understood? Yeah, this is the entry for recording the depreciation. Now see in this entry what happened? Provision account credited. So in the provision account on the credit side, first I will put the date 2013 March 31st, last date of the first year. Then I will put the amount. How much amount? 2,000, the amount of depreciation. Then I will write the name of the opposite account, and the name of the opposite account is which one? Profit and loss account. Got it? Yeah. So first year is over. First year is done. Now see what I will do. I will compute the balance of both the accounts. So see, equipment account will show debit balance because this is asset. So this will show debit balance on the last date. Last date is 2013 March 31st. March 31st. And I will write here balance carried down. How much amount? 10,000. This is the balance. And this balance I will carry forward in the next year, 2013 April 1st. April 1st. I will write here balance brought down. How much amount? 10,000. Agree? Okay. Now same thing I will do with the provision for depreciation account. I will compute the balance. Now see the balance, provision account will show which balance? Credit balance, isn't it? So, on the last date 2013 March 31st. I will write balance carried down. And how much amount? 2,000. Got it? Now this credit balance I will show in the next year on the credit side, 2013 April 1st. April 1st. I will show here balance brought down. How much amount? 2,000. Understood? The first year is over and now we are on the first date of the second year. Now we are in the year 2013-14 and today is the first date. So equipment account is showing debit balance on the first date $10,000 and provision for depreciation account is showing credit balance on the first date. Okay. Now in the second year also again we will charge depreciation. There is no sale, no purchase in the second year, isn't it? We sold this equipment in the third year. In the second year there is no purchase, no sale of equipment. Got it? So in the second year at the end of the year, when the year will over? 2014 March 31st, isn't it? The year will over. So again I will charge with depreciation. How much amount? $2,000. Yeah, so again I will pass this type of entry, the second entry, again I will pass. Yeah, profit and loss account debited, provision for depreciation credit. Okay. So provision account credited, so on its credit side again I will put the amount 2,000 and I will write the name of the opposite account. The name of the opposite account is profit and loss account. Okay. And there is no posting in the equipment account. Got it? Yeah. Now the second year is over. Now let's compute the balance of both the accounts. So first I am going to compute the balance of provision account. This time provision will show balance how much? 4,000. Credit balance 4,000. So I will write here 4,000 and I will write here balance carried down and I will put the last date of the second year, 2014 March 31st. Okay. And now in the third year is which one? 2014 April 1st, isn't it? The third year will start and here I will write balance brought down. And how much amount this time? Opening balance 4,000. Got it? Yeah, so 2 years done. Now we are in the third year. Now let me compute the balance of this equipment account also. Equipment account will show same balance. Balance carried down, same amount. And I will put the last date of the year, 2014. Just a minute. 2014 and March 31st. Okay. Yeah, done. Got it? Yeah. Balance how much amount? Same 10,000. Got it? Yeah. Now this is showing debit balance, isn't it? Now in the next year, 2014 April 1st, I will tear it down. So I will drop down this balance, isn't it? So this balance I am bringing down here, drop down. How much amount? 10,000. So now got it? So 2 years over. Now we are in the third year, 2014-15. Okay. Now in this year what happened? In this year we sold half of this equipment. See here in the question, on 1st October 2014. It means after 6 months. We are in the third year, and in third year we started on this date, 1st April. So see it, April, May, June, July, August, September, October. It means 6 months over. Now in the third year, on the first date of the 7th month, this is the 7th month, because April, May, June, July, August, September, so 6 months gone. Now this is the first day, 1st October. Okay, this is the 7th month in the third year. Now what happened in this year, in this month? What Mustafa has done? He sold half of the equipment on Credit to X Limited for $2,500. He sold the entire equipment or half equipment? Half equipment he sold. And on which date? 1st October. Now as per the condition, in this year he will not charge any depreciation, because this is the year in which he sold that equipment. So there will be no depreciation. So we will not pass any entry for the depreciation. Got it? Immediately we will record the entry for the sale and the entry for profit or loss on sale of equipment. Okay. Now see what we will do. Now we are selling the equipment on 1st October, isn't it? Now see what I will do. I will transfer the balance of equipment to which account? I will transfer this balance. Now I am selling this equipment. I am not selling entire equipment. I am selling only half equipment. So half of this equipment, half amount of this equipment, I will transfer to which account? Yeah, disposal account. Excellent. So I will transfer 10,000 or only 5,000? Because half of the equipment we are selling, it means only half of this 10,000. It means $5,000 I will transfer to which account? Equipment disposal account. Now see, equipment is showing debit balance, isn't it? So to transfer it, what I will do? I will credit the equipment. It is showing debit balance, so to transfer it, I will credit the equipment. I will credit the equipment with the $5,000 and I will debit equipment disposal account. Equipment disposal account. How much amount? $5,000. Got it? So this is the entry. Any objection on the entry, tell me? Understood the entry? Equipment showing debit balance, so to transfer it I will credit the equipment and I will transfer equipment to equipment disposal account. Okay? Now see the ledger portion and see the ledger portion. In this entry, equipment account created. So on the credit side, first I will put the date 2014 October 1st, because I have done this on October 1st. Equipment is created. From the credit side I will write how much amount? $5,000, and I will write the name of the opposite account. What is the name of opposite account? Equipment disposal account. Okay? Equipment disposal account. EQ means equipment. Got it? Yeah. So posting done in equipment account. Now next posting will take place in which account? Equipment disposal. Equipment disposal is debited in the entry. So in the equipment disposal account, on the debit side, first I will put the date 2014 October 1st. Debited na? So I will write the name of the opposite account. And the name of the opposite account is equipment with $5,000. Got it? Yeah. Now one more thing I will do. I will transfer the balance of provision for depreciation to which account? Pardon? No, I will transfer this, the balance of provision I will transfer. Here I transfer the balance of equipment, isn't it? To which account? And related depreciation. The asset which I sold only half asset na. So half of this balance of provision I will transfer to disposal account. Not the entire balance. I sold half equipment. So half of this amount, this provision balance, I will transfer to which account? Disposal account. Got it? If I would have sold the entire equipment, then in that case I need to transfer the entire balance of provision, 4,000. But as here in this question I sold only half part of the equipment, so only half of this provision I will transfer to the equipment. Related depreciation I will transfer to disposal account. Got it? Pardon? No. Not 4 years. Who said 4 years? There is no 4 years. There is only rate of depreciation given 20%. No, I am not asking to pay him. You are not getting actually. I am not asking anything. There is no 4 years in the question. Actually, in this year we are selling the equipment, but we are selling half equipment. So half amount is from equipment and half amount from provision. From both the accounts, half amount we need to transfer. We need to transfer to which account? Disposal account. Yeah. There is no leave. Half part, only half part. Half of the equipment. There is no number of years in the question. You read the question. On credit means we need to pay money to AB Limited. That is a different matter. We will pay him later on. There is no number of years. We use the equipment for 2 years, full years we use, and in the third year, after using the equipment for 6 months, in the 7th month we sold the equipment. But we are selling half equipment, not the entire equipment. So half amount from equipment account, how much? 10,000 in it, half how much? 5,000. So that we need to transfer to disposal account. And from here also half amount only. Right now what is the balance? 4,000. So it's half amount we need to transfer. How much? 2,000. So we need to transfer. We need to transfer to which account? Disposal account. Now see provision account saying which balance? Credit balance. So to transfer it, what we will do? I will debit it. Provision for depreciation. Got it? I will debit it because it is showing credit balance. So when I will transfer, it will be debited 2,000, and I will transfer to which account? Equipment disposal. And how much amount? Only 2,000, half amount. Got it? Now see the entry. In this entry, provision account debited. So on the debit side, first I will put the date 2014 October 1st. On the debit side, I will write the name of the opposite account, and the name of opposite account is equipment disposal, isn't it? Yeah. Equipment disposal. And how much amount? Yeah, 2,000. And I will make posting it at 2,000. Okay, so posting done in provision account. Now equipment disposal is created. So in the credit side, on the credit side of equipment disposal, first I will put the date 2014 October 1st. On the credit side I will put the amount 2000 and I will write here the name of the opposite account. Provision for depreciation. Got it? Yeah. So see, now in equipment disposal we have the value of the half equipment. This is the value of the half equipment, cost of the half equipment, and we have the related depreciation of the half equipment. Okay. So what is the actual value of the half equipment now? 5,000 is the actual value of the half equipment. I am asking what is the actual value of the half equipment. That is the actual value or that is the cost? You are increasing the value. Depreciation means a reduction in value. 3,000. Depreciation means not increase the value. So the cost of the half equipment is this much. Until now we charge this much depreciation on that half equipment. Okay. So 5 minus 2, the actual value of that equipment is how much? 3,000. And we sold that half equipment for how much amount? Yeah. So there will be profit or loss? Loss. Good. Because we sold for this much amount and the actual value was 3,000. So there will be loss of $500. Understood? Yeah. Now see what entry I will pass. So understood the procedure? So whenever we sell any asset, first we will transfer the value, the cost of that asset from asset account to the asset disposal account. And after that we will transfer related depreciation from provision for depreciation account to equipment disposal account. Okay, asset disposal account. Now the moment we will transfer both the amount, what will happen? The asset disposal account will show the actual value of that asset. 5,000 was the cost. Till now we charge this much depreciation. What is the actual value of that half part of the equipment? 3,000. So once you got the actual value, then compare that actual value with the sale price. And if the sale price is less, then there will be loss. Agree? And if the sale price is more, then there will be profit. So here, see, there is a loss, isn't it? Now see what entry I will pass. See the entry. And I sold this equipment on cash basis or on credit basis. See here in the question, see. On 1st October 2014, half of the equipment was sold on credit basis to X Limited. So we need to recover money from X Limited, isn't it? X Limited is my what? Accounts receivable now. So I will debit the asset account. Okay. And how much amount? 2,500, because I sold that equipment for 2,500. This is accounts receivable. Understood? I am not debiting the 3,000. This is the calculation. This is the calculation. Don't mix this with this entry. Here I am passing the entry. Don't mix this 3,000 with 2,500. Both are different. So X Limited is what? Accounts receivable. So as the accounts receivable is our asset. Because I sold, he didn't pay money, he will pay money later on. It means he is accounts receivable. Company is accounts receivable, X Limited. So increase in account receivable debit. And how much amount I sold that equipment for 2,500. So I have to recover 2,500 from X Limited. So X Limited debit 2,500. And there is a loss of 500, isn't it? Loss will be debited. Loss on sale of equipment. And how much amount? There is a loss? 500. Isn't it? Yeah. And assets gone. Half asset gone na. So there is a decrease in assets. So decrease in asset means credit. Equipment disposal account. I will write equipment disposal account. And what was the value of that half asset today? 3000, isn't it? Today the value of that half equipment is 3000, but we sold only for 2500. So there is a loss of 500. Got it? So understood this entry? Accounts receivable debited, isn't it? So this is loss, debit the loss account, and assets gone, so credit the equipment disposal account, decrease in asset credit. But in place of crediting equipment account, I will credit equipment disposal account. Okay, 3000 with the actual value. Now see, in the entry equipment disposal is created, isn't? So on its credit side I will write the name of the opposite account. It's created, that's why on its credit side. X Limited, how much amount? 2500. And loss on sale of equipment, isn't it? How much amount? 500. Okay, and I will put the date October 1st. Oh, just a minute. October 1st, and here also October. Okay, so equipment disposal created, so that's why on its credit side I wrote here the name of the opposite account, X Limited, with 2500, and loss on sale of equipment with 500. Got it? Now equipment disposal account is closed, as total of both the sides are equal. There is no balance in equipment disposal account. Equipment disposal account showing zero balance. Got it? Yeah, understood? But there is balance in equipment account still, because we sold only half equipment. So there will be balance in equipment account, and there will be balance in provision for depreciation account. Now see the balance. The total of debit is more. So 10,000, same total I will write here, 10,000. And now see, from this 10,000 I will subtract this 5,000. So the balance I got how much? 5,000. Got it? Yeah, and I will, yeah, not October, now last date, 2015, March 31st. Because always we compute the balance on the last date. On the first date, this was the balance, 10,000. But during the year, we sold the equipment, 5,000. So on the last date of this year, we have balance this much. Okay. Now same thing we will do here in provision for depreciation account. Total of credit is more, 4,000. Same 4,000 I will write here. Okay. But here one thing we have to do. Still we have how much equipment? Half equipment still we have now. So we need to charge depreciation of that half part. We sold only half. So on the last date, on the remaining half I will charge the depreciation, isn't it? This was the opening balance, got it? And out of 4,000, 2,000 I transferred because I sold the half equipment, isn't it? But still remaining half equipment is with me. So on that half equipment, don't you think I will charge depreciation in this year also? Because I sold only half equipment. So on that half equipment I will not charge any depreciation. But on remaining equipment I will charge depreciation, isn't it? So again I will pass this entry. Which entry? This entry. Provision for, sorry, the entry I have removed. What entry I will pass for the depreciation? Profit and loss account debit and provision for depreciation credit, isn't it? Understood? So provision created, so on the credit side I will write profit and loss account. And how much amount, tell me? Not 2,000, only 1,000. Why 1,000? 2,000 was the depreciation on entire equipment. See, in the first year we had a whole equipment, so 2,000. In the second year also we had a whole equipment, so 2,000 I charged here. But in the third year, at the end of the third year we have only half equipment, so I will charge only half depreciation, isn't it? Now see the balance, 4,000 plus 1,000, how much? 5,000. So Same 5,000 I will write here, and from this 5,000 what I will do, I will subtract. Just a minute. From this 5,000 I will subtract this 2,000. So I got balance how much? This is 2,000. See, what was the total on the credit side? 5,000. Same total I wrote here, 5,000. And 5 minus 2, what is the balance? Yeah, this is the balance. So I will write here balance, carry down, and I will put the last date 2015. Oh my god. Just a minute. Delete. Select. So I will write here 2015. It's not taking 2015. Just a minute. Okay, so 2015, and here I will put the last date March 31st. Okay, so this is the closing balance. Got it? So what is the closing balance of equipment? The closing balance of equipment is how much? This half equipment. This is the closing balance. And what is the closing balance of provision? This is the closing balance of provision. Opening balance we had 4,000, but half equipment we sold, so half amount I transferred, isn't it? Now still we have half equipment, so on that half equipment I will charge the depreciation, but now not 2,000, only 1,000. Okay? Pardon? Yeah, 1,000, because in this year we had only half equipment at the end of the year. So only that half equipment I will charge the depreciation 1,000. So 4 plus 1, 5, same I wrote here, and 5 minus 2, I got the balance how much? 3,000. Understood? Okay then, sir, sufficient for today? Yeah, I will send you the recording file. And did you watch the videos of bank reconciliation statement? For all 4 videos.